hospitality. At 12:30 we will have Puneet Chatwal speak about the outlook for the next few years for Indian hotels. But before that, let's talk about Lemon Tree Hotels, the first guest on our show today. The second quarter results, they were good. Why were they good? Because there was increased utilization of the Mumbai Aurika. The EBITDA margin also was good, limited by the 8 crore rupee renovation expense. So had it been for the underlying business, the company, it's done extremely well in what is a seasonally weak quarter for the hospitality sector. And more importantly, we enter into a seasonally strong H2 for the hotel industry as well. Patanjali G Keswani, the Chairman and Managing Director of Lemon Tree Hotels, joins in to discuss these numbers and more. Mr. Keswani, thank you so much for joining in. And we've understood for the last couple of quarters, the expansion in utilization of Mumbai Aurika and the renovation that you are doing for a lot of your rooms has actually impacted the performance. But despite that, the underlying trend remains strong. So to that extent, I would like to ask you, the second half of this year, how does that look, especially when it comes to finishing the renovation and increased utilization of the Aurika?
So I think second half will be much, much better than the first half, both from the occupancy perspective and from the average room rate perspective. Aurika will do much better in Q3 and Q4 than it did in Q1 and Q2 because we were still in the midst of churning our segments, our customer segments in that hotel. As far as renovation goes, we were renovating about 25% of our inventory. And most of those rooms have come back except the Keys portfolio, where we will continue to renovate it for the next 18 odd months till we complete the entire portfolio of Keys, which is about 1,000 rooms. So we've tried to keep the rooms open and the cities where there is maximum demand and highest pricing power. And those will obviously now reflect in our P&L and revenue for H2.
Mr. Keswani, good afternoon. Thank you so much for joining in. If you could share the occupancy levels as well for Aurika, how were they in the second quarter and what are the trends that you have seen in the first month and a half for this current quarter as well? And if you could share a number for what you expect to end the year with.
See, in H1, we did about 60%, which is about 340 rooms in Aurika, Bombay. And in H2, we will be north of 60%. Which is basically north of 400 rooms. Now, exactly what that number will be, I cannot comment on, but it will be, as I said, much higher occupancy than in H1 and also a higher room rate.
Right. So, you said that H2 overall will be much, much better than H1. Would you hazard a guess as to what that much, much better would look like when it comes to the numbers itself?
See, normally, depending on the hotels that one has in the portfolio, seasonality can be can have an impact of as much as 60-40 winter-summer. But because we have many hotels in business destinations and so on, where the seasonality is a little less, we have more. Typically, we have 55% in winter and 45% in summer of our revenue. Okay, which means 1.2. But I reckon this year it will be closer to 1.3, which means whatever we do in summer, we should do about I shouldn't say 1.3, I'd say 1.25 to 1.3 times that revenue in H2.
Right. So first half you've done about 550. I just multiply that by 1.25 or 1.3. You end up with anywhere between 1,200 to 1,500 crores on the top line. With improved margins as well. Yes, go ahead.
That's a very wide range. So I would say we would do about 700 crores in winter, plus minus. So, which means 1,250 odd crores, maybe even 1,275.
And what about the operational performance? Because now the renovation expense is mostly done. You have increased occupancy. So I believe the delta there would be probably more than this 1.2, 1.3 that you're talking about.
Yes, operating leverage is obviously such that your costs are fixed in winter and summer. In fact, some of your costs come down in winter because your power and fuel expenses are not quite so much because it's not so hot. So most of the incremental revenue will flow into your EBITDA.
And if you could share levels as well for margins, Mr. Keswani, you ended the first half at around 44.5. Would you expect to remain at those levels by the end of the year, or do you see an uptick?
Will be
north of 50.
Yeah, in winter.
Interesting. And I wanted to also ask you about your management fees. For the second quarter as well, your management fees went up by around 32%. What do you expect? Do you expect that to trend northwards as well in the second half? Is there a targeted number that you have for the full year?
See, it's like this. I expect management fees, excluding our Fleur hotels, that is third-party hotels, to be between 65 to 70 crores this year. But because we have signed a whole lot of new hotels, without getting into a quarter by quarter or half year by half year growth, my broad expectation is that in the next 2 to 3 years, we will be 2.5 to 3 times this number, which means we'll be between 150 to 200 crores of management fee income from third-party hotels, excluding the Fleur portfolio, which we also manage, where we are the largest shareholders.
And Fleur would be how much? Because this quarter as well, Fleur did about 13.5 crores in terms of fees. So now that we have 150 to 200 crore coming in from your own third-party hotels, Fleur, how much could that be?
No, we have third-party hotels are not owned by us. So what I said is in the next 2.5 years, the hotels not owned by us will give us fees of 150 to 200 crores. And by then I expect Fleur would be also in that zone, 150 to 250 crores.
So roughly,
basically the two put together would be 350 to 400 crores of fees.
Got that. Thank you so much for joining in, Mr. Keswani. We'd have loved to have a longer conversation with you, but we'll leave that for some time in the middle of the quarter, where you'll have more details on how the third quarter has been panning out as well, just before we move into the holiday winter season as well. For now, we'll be happy with 1250 crores on the top line, 50% plus in terms of margins, and expected nearly 350 to 400 crores coming in from management fees, including Fleur, over the next couple of years. The stock holding up well in the green. With that, we take a short break, come back on the other side. We'll get you an exclusive conversation we had with Peter Elbers, the CEO of Indigo Airlines, on the sidelines of the CNBC-TV18 Global Leadership Summit.